Hello and welcome to our webinar. We'd like to welcome all of our participants around Australia. Thank you for taking the time out of your day as we have some critical content which comes around this time of year. Today, we'll discuss IDPS tax statements on North Online. My name's Joe Tadaro, Advisor Education Analyst at North. Today, we'll examine how to locate the statement, when to expect the document to become available for your clients, and much more. With me today is Nicole Duffy, Investment Operations Relationship Manager, who'll be answering your questions when you send them through in our chat. If you've joined us before, you know that you can ask a question at any time throughout the session by selecting the left-hand side menu within the chat icon. We'll endeavour to get back to you with an answer in the next couple of days. If for any reason the audio drops out, please close your browser and then reopen the session. If you're still having technical difficulties, this session, as always, will be recorded and then uploaded to North Online under the support heading across the top, then down to training videos, and then under webinar recordings. As a part of the session today, you're going to be gaining an overview of the North Online functionality and support material that is available to you. Learn about attributed managed investment trust funds or AMIT funds. Understand the timeline of when the statement can be made available to your client, and then discover the components which make up the tax statement. So let's now start with the support material that can assist you. So here we are on North Online. Select products from the menu across the top and then product disclosure documents. As you scroll down the page towards the bottom, you'll see that there is a guide to your tax report for 2021-2022. So let's go ahead and select this document now. The guide will run through how to read and use the tax report. It will also include important notes. And then towards the end, we'll include a glossary of terms. Now let's select the AMIT funds and your tax report. And we'll discuss this at length a little bit later in our session. So this document will include the attribution income and cost-based adjustment in North Tax Reports Explained. It includes a little bit of background and has lots of information, including diagrams. Let's now move on to an overview of the tax statement. So following the end of the financial year and after receipt of all income distributions and their tax details, we'll provide a report that shows tax information for the year to help clients complete their tax return. The report will be made available to clients electronically and appear in their statements and correspondence on North Online, which we'll look at in a few moments' time. This report is also sent to the ATO by the end of October each year. The income component of the tax report will be included in the client's tax portal, but the ATO will not show any accessible income from CGT events in the portal. Current clients and those that have exited the North platform during the 21-22 tax year will receive these reports. Let's talk a little bit about the timing of the tax statements, because the timing of these reports are dependent on the associated fund managers calculating their own tax information. We're unable to provide an exact date of delivery. For clients holding listed trusts, these assets don't release their tax information typically until September. So the question on everyone's lips are, when will my tax statement be ready? Well, the timing of those statements, they are dependent on the associated fund managers calculating their own tax information. So it is out of our hands. So who would receive the statement? Well, the current IDPS clients and those that have exited the North platform during the 21-22 tax year will receive these reports. Further to that, when will my statement become ready? Well, we're unable to provide an exact date of delivery. Listed trust assets don't release their information until September. But what you can do is use previous financial years as a guide as to when the statement will become available for your client when they hold similar or the same assets held within their account. There are some important notes, including the information in the tax report applies to ordinary investments, so funds not invested in super and pension accounts is limited to IDPS clients only. If you have income or deductions from other sources, you must add them to the amounts in the tax report before transferring the figures to the client's tax return. In terms of communication, an SMS is issued to the client's registered mobile number and an email is issued to the client's registered email address to alert the client that the statement is uploaded to their online statements and correspondence. There is a glossary of terms that are available on page number 3 of the North Tax Guide that we looked at a little bit earlier. In terms of the process, due to the custodial nature of the holding, we must wait for the fund manager to send the tax component information to the custodian, which is Citibank, before receiving it on the platform. We're going to be looking at a timeline of events in a few moments' time. But before we do, so many of you out there may have received a call from your client urging you to send them their tax statement so they can complete their tax return. As is always the case, from July onwards, many clients are anxious to complete their tax return. The current environment means that this is true more than ever. If this statement is not yet available in the client's statements and correspondence on North Online, a guide to when this might become available is by confirming when last year's statement was allocated to their documents, if the account was open in the previous financial year, and investments have remained the same. So please note this is just a bit of a rough guide as to when it becomes available. Our navigation on North Online will also focus on where you can find that tax statement for your client once it is available. So here we are on North Online within your client's profile with their investment account listed. To view the IDPS tax statement, select Statements and Correspondence from the menu across the top. Then under Client and Account, select the appropriate account number. Under Document Type, select Tax Statement. Under the date range, select Since Inception and then select Search. The tax statements for the client will be then listed below. The date on the left-hand side will be a good indicator as to when you might receive the IDPS tax statement for the last financial year, providing investments within the account remain the same. This is where the tax statement will be listed for your client. Let's now look at some factors which impact the generation of the tax statement. This is an example of how the timing of tax information from each of your client's managed funds' individual fund managers will impact the completion of the tax statement. This client has 4 investments which are managed funds which release tax information at different times. This information is then processed by the custodian and are then tested and signed off by North prior to the statement being released. Firstly, Ausbil releases their tax information in mid-July along with Pendle Property Investment Fund about a week later. Both of those funds' tax information is then processed by the custodian on the 28th of July. They are both tested and signed off by North on the 1st of August. On the 24th of August, both Perpetual Wholesale Smaller Companies Fund and AMP Wholesale Small Companies Fund Class A released their tax information. The AMP fund is processed by the custodian on the 25th of August, while Perpetual processed by the custodian on the 29th of August. While the AMP fund is tested and signed off on the 28th, Perpetual is tested and signed off by North on the 1st of September. The statement is then released on the 2nd of September. So we've spoken about timeframes, where to locate the tax statement, and when likely to receive the document. Let's now focus on the tax statement itself. Let's start with section number 1, the tax summary. This section provides references to ATO tax return labels for individuals, companies, self-managed super funds, and trust tax returns. The deductible expenses in section 1 include initial advice and contribution fees. For self-managed super funds, the planning and advice fee and deferred entry fee are not included in the deductible expenses in this section. Please refer to Note 5 in the Important Notes section of the guide for more information on the deductibility of expenses. For section number 2, Income Details, asset-wide details of cash income received for the financial year are listed. In Section 3, the deductible expenses, fees that relate to the provision of ongoing advice are generally fully tax deductible. Fees that relate to the provision of upfront or initial advice are generally not tax deductible. The ongoing management fee and client advice fees are generally fully tax deductible. The deductibility of client advice fee initial and client advice fee contributions or upfront fees depend on your individual circumstances and whether these fees relate to initial upfront advice or ongoing advice. By default, these upfront fees have been reported as deductible fees at Section 3A and in Section 1 of the tax statement. Should these fees not relate to the provision of ongoing advice, the amount reported at Section 3A and Section 1 will not be correct. You will need to adjust the amount reported at Section 3A and in Section 1 by the extent to which these upfront fees do not relate to the provision of ongoing advice. In terms of insurance premiums, they are generally deductible, including salary continuance premiums for individual investors and death in TPD premiums for superannuation funds. Let's move on to section number 4, income distributions. Franking credits attached to dividends that may appear on your statement should be checked with your tax agent to confirm if you satisfy the 45-day holding rule and or other criteria to receive them. Let's move on to section number 5, income. List a full breakdown of all distributions and attributions received during the period, including the type of income, franking credits, and other relevant important information. We will show you an example of how information reported here in the tax statement is not reflected in your client's annual statement in a few moments' time. Next, we have the realized capital gains or losses. Details of capital gains or losses are realized in the financial year and broken down by asset. We then have section 7, which is capital gains tax. It is summarized details of capital gains or losses to be used to complete the CGT schedule if required. We then have gains or losses on disposal of traditional securities. Details of these gains or losses on traditional securities disposed of during the year will be broken down by asset. Now let's move on to attributed managed investment trust. You might know this as AMIT funds. So what is the AMIT regime? Almost 95% of the funds that we hold on the platform have elected to report using the new AMIT tax regime. This means that cash distributed does not necessarily have to equal tax attributed. The difference between cash distributed and the total tax component is intended to be compensated by adjusting the AMIT cost base. A cost base increase generally occurs when the cash distributed is less than the taxable components and vice versa. It is possible under the AMIT regime for attributed cash components in Section 4 not to match the physical cash received, and for the cost base adjustment not to reconcile to the difference. This may seem illogical, but it does happen under the AMIT regime. So where do you find more information on this? Well, under North Online under Products and Product Disclosure Documents, you'll find that AMIT funds in your tax report guide that we showed you earlier. Let's now move on to some of the most frequently asked questions relating to the IDPS tax statement. So can the tax statement for a deceased or closed account be produced any earlier? As we spoke about in our session earlier, where we went through the timeline of events on how the statement is generated for your client, due to the custodial holding, we can't produce any one client statement earlier than others. So why does income not match the figure on the annual statement? And we spoke about briefly just before when we referred to section 5 of income. The annual statements are a snapshot at the 30th of June. Tax statements take into account payments received after the 30th of June that actually apply to the previous financial tax year. So if you look at an example of that, and here we've got the fund name as the iShares Australian Bond Index Fund. For the distribution period of the 1st of April 2022 to the 30th of June 2022, that distribution was actually received on the 12th of July. So this particular income figure will not appear on the annual statement, however, it does appear in the tax statement. This is also repeated for the Real Index Australian Share Fund Class A, with a distribution period of the 7th of April 2022 to the 30th of June 2022, where the distribution was received on the 5th of July. This figure will not be displayed in the client's annual statement, but does appear in the client's tax statement. As a reminder to please keep your questions coming, and Nicole will come back to you in the next couple of days. We'd like to thank you very much for your attendance today. We hope that the information in the session today has armed you to assist in answering any questions that your client may pose. We hope to see you all again in our next webinar session. From now, it's goodbye from Nicole and myself.